So I'm going to run through the 2018 question 5 interpretation of accounts question, which is born to run PLC. And as ever in these questions, I'm given a little bit of information up here. Some of that could be useful later. Like it tells me they've got 400,000 ordinary shares and they've issued 350. That means they've another 50 to issue. Same with the preference, they've still got some to issue. That could come in later on in the question, in the part B in particular. I'm given an extract from a profit and loss. I'm given an extract from a balance sheet, or quite a short, kind of compact profit and loss and balance sheet. I am given some information for the prior year. So that's going to come in part B. That's going to be my prompt for a lot of the stuff I put in part B. And down here, just the market price of an ordinary share. Occasionally you have to work that out as part of part A, but more often it's given there just underneath the balance sheet. So the part A of this question, it's straightforward if you know those ratios, those formulas really, really well. Okay, so I'm asked for 5 here. It's 5 or 6 usually. I think you'll see when we get into one of these that you do need to work out 2 ratios to get just one of them. So around 5 or 6 is what's coming up here in part A. We're at 50 marks, it's normally in and around that. Part B, normally in and around 40 marks. And then the part C can be between 10 and 15 marks. But it's the part A that I'll run through in this video. So first up here, I am asked to get cash purchases if the period of credit received from trade creditors is 2.5 months. So period of credit received from trade creditors, that's one of the formulas that we need to learn. So if I down, so period of credit from creditors, or it will also come up as period of credit to debtors, and it's the exact same formula, just with a couple of small differences. So period of credit received from creditors is going to be trade creditors multiplied by, it can be 12 and then the answer will be in months, by 52 and the answer will be in weeks, or 365 and the answer will be in days. They give me the answer in months, so I'm going to multiply by 12, and it's months they tend to give on the exam. Over, and then that's over credit purchases. So we are looking for cash purchases. We have, or we will be able to work out total purchases from the question. So total purchases, take away this number, is going to give us cash purchases. So it's quite an indirect way of getting at it, but this is how this formula is examined. Okay, I don't think I've seen it come up where they're asking you to figure out what the period of credit is. It's usually given and then you work back to cash purchases, or if this is debtors, this would be debtors and this would be sales, and you'd be working out cash sales as well. So this formula here is going to be equal to 2.5, so we know the answer. So trade creditors, I am given down here, it's 80,000 euro. Multiplied by 12 over credit purchases, so over credit equals 2.5. So if you can use C here or use X, whatever you want to use. It's your unknown. So maybe use X. Just treat it like an algebra question. So bring the X over, and it becomes multiplied by. So on your left hand side, you've got 80,000 multiplied by 12. So 80,000 multiplied by 12 is 960,000. Is equal to, bring the X over and becomes multiplied by, so you've got 2.5 X. So then X multiplied by 2.5, bring the multiplied by 2.5 over, and it becomes divided by. So you're going to get 960,000 divided by 2.5 is equal to X. So divide that by 2.5 and you get 384,000. So 384,000 is your credit purchases. Now, question is asking for cash purchases, so I need to go over here and figure out my total purchases first. So opening stock, usually I'd have plus purchases in there, then take away closing stock is equal to my cost of sales. Okay, so you'll notice you have three of those numbers. So your opening stock is 60,000 plus purchases I don't know. Take away closing stock is 90,000 equals my cost of sales they give me as 560,000. So on the left hand side here, 60 minus 90, that is minus 30,000. So purchases minus 30,000 equals 560. Bring the minus 30 over, it becomes plus. So purchases equals 560,000 plus 30,000. So total purchases is equal to 590,000. So then cash purchases is total purchases, take away credit purchases. So just take away the 384 from that. So that should be 206,000. So cash purchases equals 206,000 euro. Now, second one I'm asked to figure out is dividend yield. This is probably the one that comes up most often in part A. It's rare that it doesn't come up. Even if they didn't come up in the part A, you'll probably be given it here and you'll have to work it out for part B anyway. So dividend yield. That is equal to dividend per share divided by the market value of one share. Okay, so dividend per share, yeah, this is kind of a two in one kind of question. You need to figure out your dividend per share first. Okay, so dividend per share is equal to your ordinary dividend divided by your market value of a share. So ordinary dividend is something I'm going to have to figure out as well. So if you look over here in your profit and loss, you have got dividends of 45,000, but that is total dividend. Okay, so total dividend is 45,000. Some of that will be an ordinary dividend and some of it will be a preference dividend. So you are going to subtract the preference dividend away. So preference dividend. So it's an 8, there are 8% preference shares. So they will give you a preference dividend every year of 8% of 200,000. So 200k multiplied by 8%, that is 16,000 euro. And you're going to take that away from your total dividend, and that's going to give you 29,000 ordinary dividend. Okay, and then I'd imagine we'll be using that 16,000 preference dividend again elsewhere. It comes up in other ratios, but 29,000 then. So of that 45,000, 29 is to ordinary shareholders and 16 is to preference shareholders. So my dividend per share then is equal to the 29,000 ordinary dividend divided by the market value of dividend per share. Dividend per share is not market value on the bottom. That's a mistake. dividend yield is dividend per share divided by market value. Dividend per share is ordinary dividend divided by the number of ordinary shares. So it's dividend per share. So it's the number of shares that goes on the bottom. So you can get that in two places. Up here, it tells you that the company has issued 350,000 ordinary shares. So that's what goes in the bottom. Or you can see it down here, ordinary shares of €1 each are equal to 350,000 euro. So 350,000 shares by €1. So 29,000 divided by 350,000. This is going to give us an answer in euro. We usually give it in cent, so you can put in a multiplied by 100 here to change it to cent, or you can do it once you get your answer. So 29,000 dividend divided by 350,000 ordinary shares. So that's it in euro. So 0.08286. So just multiply that by 100 to change it into cent. So we have two decimal places maybe, so 8.29 cent is your dividend per share. Okay, so 8.29 cent for dividend per share. We'll return then to dividend yield. And we said that was dividend per share over market value of a share. So your dividend per share is 8.29 cent. So then when you're putting the market value of a share in here, it needs to be in cent as well. You're not going to divide cent by euro. Okay, so €1.35 is 135 cent. And then we are going to multiply that by 100 to make it a percentage. So 8.29 divided by 135 and then multiply by 100 to turn it into a percentage is 6.14%. Okay, I'll just calculate these here maybe when I'm going through the part B and I'm putting some of these into the part B. I might talk a little bit more about what they mean, but there's your dividend yield of 6.14%. And again, just to highlight the mistake I made there, the dividend per share formula, ordinary dividend divided by number of ordinary shares, not market price of a share, it's per share, so it is number of shares that goes on the bottom. So next formula is the price earnings ratio in part 3, another common enough one. So the price earnings ratio, this is going to be equal to the market value of a share and divided by the earnings per share. So another kind of 2-for-1 question. I'm going to need to work out the earnings per share first. All right. So earnings per share then is equal to your net profit take away preference dividends. Over, again, it's per share, so you're going to divide it by the number of shares issued. I should probably stretch that over 2 lines to make it easier to read. So net profit, so you've got a net profit of 82,000 and then you're taking 45,000 total dividends away from it. We've already figured out the preference dividend is 8% of 200,000. It's 16,000 euro. So my earnings per share there is going to be net profit 82,000, take away 16,000 preference dividend. all over number of ordinary shares issued, so it's the same as the dividend per share. It's 350,000 on the bottom. So this is another one which is going to be, this is going to give us an answer in euro. It's going to be quite small, so we'll probably multiply it by 100 to get it into cent. So 82,000 minus 16,000 is that, divided by 350,000. And that is so 0.18857. That's it in euro. So multiply that by 100 to change it into cent. So it is 18.86 cent. And that's your earnings per share. Your price earnings ratio then. So your market value of a share divided by your earnings per share. So again, you don't want to divide euro by cent, so just write your market value of a share in cent. So 135 divided by your 18.86. And that is 7.16. And that is in years. Okay. So that's your price earnings ratio. If I do the return on capital employed then as well. So the return on capital employed is your profit before interest and tax over over capital employed. Yeah. It's profit before interest and tax over capital employed, and then multiply by 100 to make it a percentage. Okay, so profit before interest and tax. So if you go over here, you've got an 82,000 euro profit after interest has been taken away. So let's just add that interest back to get the profit before interest. So 82,000 profit after interest, add back the 18,000 interest. That's going to be over then capital employed. So capital employed is, so it's the answer to your balance sheet. So your 930 down here in the financed by. And multiplied by 100. And if I do that, that's going to give me 10.75%. Return on capital employed. Return on capital employed, asked sometimes in the part A, even if it's not asked in the part A, it'll be there in the part B, so you'll end up working it out anyway. And then the last one I'm going to figure out here is part 5, so the interest cover. So interest cover, and that is equal to the net profit before interest again. So it's the same number on top as in return on capital employed. So profit before interest and tax over the interest charge for the year. Okay, so the profit before interest and tax, that was the 82,000 plus the 18,000. Over the interest charge is the 18,000. So 82 plus 18 is going to be 100 divided by 18,000 then So that's going to be to 2 decimal places 5. So 2 decimal places come from here. 5.56. And the interest cover I would give in times. So it's how many times does your profit before interest cover your interest? Okay, so like it's I suppose how much can your profits decrease and still have money left over to pay your interest. So that's the part A done. So that is worth 50 marks. So what I would say about this question is, if you know those formulas, this part A here is one you can fly through a bit quicker than maybe the marks dictate. But then I would say the 40 marker here in part B will probably take a little bit maybe longer than the marks dictate, because you're just doing the 5 specific ratios here. Well, ended up being 7 ratios, but you can kind of fly through that quite quickly if you know your formulas. Just be careful with the units, the times, the years, the percentage, cent, etc. But that's it for part A, and I will do the part B in the next video.